of 16 different strategies I traded in 2024. And across these 16 strategies, I made over 30,000 as passive income. Hello investors and future investors, welcome to 1 Hour Options channel. On this channel, I'm sharing behind the scenes and step-by-step instructions of consistent winning strategies whether the market is up or down. All you're going to need to invest today is a bit of your time for this video and start trading as little as 1 hour a week. If that sounds good to you, welcome to the channel for passive income via options trading, which I call it pivot. Alright, so if you somehow stumble upon this video, that means you have probably heard of many trading option strategies out there. Cover calls, naked calls, protected puts, iron condor, straddle, strangle, just to name a few. Now, whether you're just starting your options journey and looking for a safe strategy to start with, or you've been trading options for a while but have not found yourself profitable consistently, this is the video for you. You're not the only one not sure of what strategy to start with or trying too many strategies and not sure which strategy sticks on the wall. I was in a similar situation when I started. If you were like me, you will want to know the highest winning strategies, biggest reward strategy, or a good balance of risk to reward ratio strategy. That's because not all strategies were created equally. Some have more upside than others. Some are riskier than another, but could pay off really well when it works. Some are better suited in some market condition. Some require active management and others require more capital requirement. Some strategies allow you to simply set it and forget it and let the edge work out for you in the long run. In this video, I'm going to share with you all the statistics of 16 different strategies I traded in 2024. And across these 16 strategies, I made over 30,000 as passive income. Remember, these were real trades using real money with the real wins and losses. The statistics are based on my actual trading experience. On top of going over all the numbers behind the scenes, I will also reveal my top strategies. The first statistic I want to share is how many trades I placed on the 16 different strategies. This is sorted by the most traded strategy on the top and fewest traded strategy on the bottom. Among the 16 different strategies, only 5 were the usual suspects, which I traded more than 15 times. Ratio call topped the list with 107 winning trades out of 115, followed by cover call, cash secure put, ratio put, and naked call. The fact that I traded some of these strategies more than 50 trades with over 90% win rates means the way I trade on these strategies have an edge consistent, and the rest of the 11 strategies were traded fewer than 10 times each. The second statistic is a winning percentage sorted by the highest winning percent to the lowest percent. It is important to note that some of these strategies like these have 100 win rates, but I only traded a few times. That's because the strategies did not come into my setup consistently. Next is ranking profit by each strategy. While we all want to trade highest winning percent strategies, how good is that strategy if it only gives us $1 or $2 every trade? So it's also important to rank the profit. 12 out of 16 strategies were profitable, and almost half of the strategies returned with more than $1,000 in profit. And cover call and wheat strategies made over $10,000 each. And the next one is ranking the average win of each strategy. 9 out of 16 strategies have an average win of more than $80. The last one is how long these strategies were traded. 6 months, 3 months, or a few weeks. 13 out of 16 strategies were traded less than 3 weeks. And all of them were no more than just around a month. So all these have fast profit, and you don't have to wait until you retire to see the profit back. The reason we need to dive into these statistics behind the scene is that we're looking for a strategy that is consistent, highest winning chance within a short amount of time, and give us proper profit. And if you apply these strategies with the way I set up, you can make consistent passive income of more than $100 a week on average. If you get this far to this video, please like, subscribe, and get notified for this video. Based on my trading statistics, the highest winning strategy is the wheel strategy because I made over $14,000 with a win rate of 80%. And I'll quickly go over what the wheel strategy is. There are only 3 steps to do in a wheel strategy. It is called a wheel strategy because you repeat those 3 steps, and once you complete those 3 steps, you start over again. Step 1. You start selling puts on a stock you want to mind owning it. By selling puts, you first collect a premium and you keep selling puts until one day you get assigned. Assigning means you have the obligation to buy the stocks for the strike price you sell the puts for. Once you get assigned, you go to step 2. You then sell the cover calls against the assigned shares, then you collect another premium. You continue selling cover calls until those stocks get called away. Once the stock get called away, you go to step 3. You make profit out of them, and then you go back to step 1 by selling puts all over again. Best thing about Will strategy is you make money at every step of the way, collecting premiums while the stocks appreciate. The $14,000 I made is a combination of selling puts and collecting profits once the stock appreciates. It's really as simple as that. The only thing for you to get started for the Will strategy is you need a bit of a capital in the event that you get assigned to buy the shares. The analogy of the Will strategy is like friends with benefits. You don't want to buy the stock and hold it like you're committed in a relationship. So you get into friends with benefits, collecting premiums at the front end, and then you engage this arrangement with the person you wouldn't mind being in a relationship in case you end up having feelings or knocking her up. That's the same thing as step 2, where you have the obligation to buy the stocks. And once you get assigned, you're happy to hold it as long as it appreciates and let it go in profit and then start over. Here are the 5 steps as a quick guide for you to get started. Number 1, identify the stock that have the positive drift. That means in the long run, it will go up, and that gives you the mental and positive vibe. Number 2, you want to make sure the stock has a very good PE ratio, which is price to earning ratio. That kind of tell me if the stock is how expensive it is. Number 3, the stock has some sort of cash flow and also dividend, and then you also do not mind owning it. That means you like the company. Number 2 is you want to choose a trading range, whether you want to trade for a week or 30 days or 45 days. Number 3, you want to pick a nice delta that gives you a nice premium, or you can just look at the price action chart or support or resistance lines. Number 4, you want to have a trade plan. There's some nuances and drawdowns. You have to deal with it a little bit. Number 5, remember you need the capital requirement in the event that the stock gets assigned away. So here are some of the stocks that I have pre-screened for you if you don't know how to do all those steps that I mentioned to you. And these are the largest company in the world, and there's very little chance of these companies will do bad in the long run. The only thing is, since these are great companies, they also require large capital, like 20K to 65K at the time of recording. But don't worry, I've also picked the stock that are for small accounts. The others I recommend are Broadcom, Chipotle, Costco, Netflix, and Walmart. These are not necessarily small accounts. For small accounts, you can use these 2 alternatives, Mara and Palantir. If you are a crypto enthusiast, Mara is a good one. And if you believe in artificial intelligence stories, Palantir is another one. I'm doing a Will strategy on Palantir in my retirement account. If you want to know how I am doing on that, please make sure you subscribe for the future video. And if you just want to be more mellow and want to avoid idiosyncratic risk, you can also go with ETF like SPY, QQQ, VGT, and VOO. SPY and QQQ are a lot more liquid, and there are a lot of the ETF that I'm not listing here. Number 2 is a consistent winning strategy. For that, both cover call and cash secure puts are great strategy to make you money consistently. Cover call has 90% win rate and has an average win of $207, and cash secure put has even higher win rate of 98%, more than the cover calls. And it kind of makes sense because the market has usually positive drift, so cover calls usually get tested. So for best risk to reward strategy, for the beginner is bull put spread or credit spread. Bull put spread consists of selling and buying puts. It's also called vertical put spread because the 2 puts are in vertical. Sell closer to the money put and buy further out of the money put. The strategy is for bullish and neutral for the market sentiment. It works when the market keeps going up, or stay where it is after you trade it. It also works if the market comes down a little bit, as long as the market does not move down very sharply. The vertical put spread is balanced because by buying a long put, the strategy has limited loss. The premium is locked in and you collect at the front. They do not usually require a lot of trade plan to manage, usually set it and forget it. They also do not require a large capital. The trade can be repeated without really having to wait for the market to come into the setup. And the best part is that the strategy is based on the long-term market positive drift. And if you look at S&P 500 here, even after all that crisis, right, 2000 technology bubble, 2008 financial crisis, and the latest being COVID, the market is very resilient and it keeps going up in the long run. So for the bull put spread statistic, I have a better statistic than my own trading experience. Here is a profit chart from Tasty Trade that if you put $10 white spread on SPY, in the long run, your profit will rise just like S&P 500 rise up. This graph even includes during the financial crisis of 2008 period. So the takeaway for this video is whether you're trading the strategy I'm sharing or you're trading your own other strategies, find those statistics, the win rate, the average win, consistency, and every trading day so that you know they're profitable in the long run and you know that your trading strategy has an edge. If you're not sure, just follow my channel. I will be covering a lot of these strategies in depth later. Here you will save time, make money, start winning with less risk. If that sounds good to you, please share your thoughts in the comments. I'll see you in the next video.